Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook for Monday, 1st of October 2012. We are at the beginning of the new month with the beginning of week, bringing again some more negative sentiment into the markets as growing fears about Spain and concerns of investors about further steps and the future of the Spanish economy push this single currency again lower at the beginning of the week, following last week's brief corrective action above 129. That was, at least from the technicals, quite promising. But of course, from the other side, fundamental things were not that great, and fresh weakness emerged, being part of a broader reversal of single currency from 131.70. Bringing it back to nearly to 128 as psychological support, losing of course 129, but more significant, cracking also the important barriers, supports at of 200 days moving average and trendline support. That from technical point of view gives quite good push for the bears for further extension lower. As said at the beginning of the week, euro is significantly lower compared to the last week, with the close briefly below 129 last week, keeping the sentiment more negative. Along with euro, the sterling fell to levels of 161, while dollar appreciated and was stronger at the beginning of the Asian session, at the beginning of this week against Swiss, and the commodities are again slightly lower. Crude oil basically is down to 91.40-50 zone. These are the lows of the session. Of course, regarding to the increased fears about Spain. Today we have a full calendar with the number of PMIs due to be released. Unlikely, but Mondays usually are known as very very tiny calendars. Today we have a number of releases, and this is quite important as the PMIs are reflecting basically the status of the economies, with the Chinese one already been released. 49.8 is release for Chinese manufacturing PMI for September, compared to 50.1 forecast and 49.2 previous month. So slightly better than the previous month, but still below the forecast and below the 50 barrier. Swiss retail sales are due in a couple of minutes. 4.1% is the forecast compared to 3.2 previous release. Quite optimistic forecast. We're going to see release when it comes out. Spanish manufacturing PMI is also due in a couple of minutes. We don't have forecast. 44 was the previous release, and a series of PMIs from the starting as said from the Eurozone at 8 o'clock GMT. September 1 is forecasted at 46, identical to the August release. UK at 8:30 GMT. September PMI at 50, slightly above the forecast, slightly above the previous month. 49.5, 50 is the forecast, of course. And series of releases from UK net lending to individuals for money supply and mortgage approvals that are more or less coming in a more optimistic way. Another disappointing thing is likely the European Eurozone unemployment rate that is forecasted at higher than the previous month. For August is seen at 11.4. That is another factor that might pressure the single currency. And from across the ocean, the Canadian RMPI for August is forecasted at 1.3 compared to 0.9%, with the IPPI due at the same time at 12:30 GMT at 0.2%, above the previous release at minus 0.5%. United States starts at 1300 GMT with the manufacturing PMI for September. A slight decrease is seen forecasted for today, 51.1 compared to August 51.5. At 1400 GMT's ISM manufacturing PMI is forecasted at 50 compared to 49.6 in August. U.S. construction spending at the same time for August 0.6 is forecast compared to minus 0.9 improvement is seen at least at today's consensus. And that will be all for today. We have a few speakers. The FOMC member Williams due to speak at 1600 GMT, and 1630 is the Fed Chairman Ben Bernanke, who is going to have a speech. From the markets, as said at the beginning, Euro is starting the week under pressure as failure to sustain, recent recovery. Do we see the? I do apologize. Okay, now we can see failure to sustain the recent recovery, and the more significant was cracking the important 200 days moving average and the trend line support, connecting lows of 122.54 and 125.00. Now it's becoming a valid, seeing more potential towards the downside as daily studies are losing their bullish momentum, and all indicators now are pointing lower with a clear break below 128, approximately 128.20, where is the 200 days moving average and trend line support, and the 128.00 as round figure support that already has been tested. 128.02 is the low of the overnight session, seeing more potential towards the downside. Ichimoku studies are quite negative on the 4-hour time frame, as the price is firmly below the cloud and below the moving averages Tenkan-sen and Kijun-sen, keeping focus towards the downside, with the daily Ichimokus giving initial signals of reversal as the price already broke below the Tenkan-sen line, the faster moving average, and currently is testing the lower one, Kijun-sen, currently at 128.17, giving initial signals of possible further reversal. On the lower time frames, negative tone dominates on the 4-hour chart as price dips to 128.02, holding below the moving averages of 20 and 55 days, with this zone between 128.90 and 129.10 seen as a good barrier to cap any corrective action. Actually, we see some movements at the beginning of European session. The first barrier comes at 128.63, is the broken bear trend line ahead of 129.00. To show any improvement and provide the temporary relief, regain of minimum 128.58.69. These are the previous highs. Is required. Basically, if we see it again above 129.70, and then we might see some stronger corrective action. Otherwise, with the negative tone, as said, dominating on 1 and 4 hour chart studies, with current bounce higher being boosted by overextended and oversold conditions on hourly chart, I don't see much potential so far. Of course, we are going to see the release of the PMIs today, number of PMIs that will have quite a good impact on the markets, and more positive releases, of course, will give us some more positive tone. Otherwise, further weakness, according to the technicals, is seen quite likely in case of a close break and close below 128.20, 128.00. That will be seen as an acceleration towards the downside, with the 127.40. These are the previous highs of mid-June, and 38.2% Fibonacci retracement of the recovery, a larger recovery rally from 120.42 to 131.70 will be seen as the next downside targets in the near term. And sterling, as we said, it lost traction, basically losing the initial support and the near-term range, consolidative range floor, extending below 161.62 and 161.36, extending losses on last Friday's renewed attempt higher towards important 163 barrier failure occurred at 162.70, and then subsequent sharp reversal that accelerated losses on the break below 162, dipped so far to 161. This is approximately 38.2% retracement of the up move from 157.69 to 163.08, with more focus seen towards the downside, as 4-hour studies are in the negative territory, as well as 1-hour chart ones, though the later ones are now bouncing on oversold conditions, and see some potential for the corrective action preceding fresh rally. As we lost some important supports, and now more focus is seen towards the downside. Immediate barriers, dynamic barriers at 161.31 and 38.10 and 20 days moving averages are now being taken out, with 55 days one coming at 161.74, close to 38.2% retracement of the near-term down move from 162.71 to 161.07, as well as broken bear trend line at 161.85, along with 162 zone expected to cap any upside action in order to maintain the current negative tone. A break below 161 is seen as a trigger for further extension. 160.77 is the main bull trend line. Loss of these levels would be seen as a trigger for further extension lower, and 160.40 as set is the next target, approximately 50% retracement, and then 160.00 as around figure resistance before this support. Before this we have a previous high at 160.33. So basically 160.33.39 is seen on a break below 161 and 160.77. That will be a signal for a stronger reversal and stronger retracement of the larger up move that started at the beginning of June from 152.67 and so far peaked at 163.08. As 163 zone offers quite tough resistance now, I would say that more likely would be further corrective consolidative action as the pair in a third consecutive attempt fails to clear these levels. More easing could be quite likely, as daily studies are now in the down move, pointing lower, seeing potential for further corrective action. Risk would be seen on loss of 159 zone. That also marks approximately 38.2% retracement of the entire move. That will turn the bulls sideways and open way for a further weakness. And dollar yen appreciated as dollar's strength of last Friday pushed the pair from the dangerous zone at 70s, approaching 77.1200 support. 77.42 was the low seen last Friday, with subsequent rally clearing our initial supports at resistances at 77.90 and 78.00, extending so far to 78.10, with the brief corrective action seen down to 77.80, where the 55 days moving average on the hourly chart so far contained, and we can see that currently the pair is heading higher again. We need to see the clearance of 78.10 as the initial barrier, and the more significant zone is around 78.40 to reattract levels on the upside at 79.21 seen as our key barriers. These are the levels last time seen at the 19th of September, where the action was limited by daily Ichimoku cloud top and just ahead of 200 days moving average. To show a stronger improvement, we need to see a gain of 79.20, 79.30 levels in order to prevent pair from a stronger weakness and allow for some more significant recovery. Otherwise, any action below these levels would be just seen as consolidation and the corrective of the latest down move, with the downside still being in the focus, as daily studies are still holding in the negative territory. 4-hour ones are showing improvement, as MACD is now attempting above the its midline, while the hourly studies are fully in the positive territory, with the current recent down move during the Asian session seen as a corrective on overbought conditions. Initial target is now at 78.00, 78.10, above which is to open next levels 78.40 and the more significant 79.79 at 2030 zone seen as a break point. And the dollar Swiss broke finally above its important 94.20 zone, where was the 200 days moving average and the previous high, now confirming the base at 92.37 and allowing for some stronger corrective action. This also confirms the false break of the bull trend line drawn of 89.29 and now sees more potential towards the upper levels as the daily studies are gaining momentum on the Ichimoku. Okay, better on the 4-hour. 4-hour Ichimoku studies are quite bullish and supportive at this point as price is holding above all relevant parameters. The cloud top and the moving averages, Kijun and Tenkan Sen seeing more potential for the upside extension. 4-hour ones are positive following a break above 94 with the current pullback seen as corrective as studies are still holding on in the positive territory with the overbought hourly seen as the main trigger. Now we have to see the levels to the 10 and 20 days moving averages have been already taken out. 93.90 is the next dynamic support as pair now attempts through psychological previous resistance now reverted to support at 94.00. Any break below 93.90 would be quite risky with the loss of previous high at higher low at 93.34 seen as a trigger towards the downside. I would say ideally reversal should occur above around the 93.80 zone, not lower, in order to keep the bulls in play for a possible extension higher with the 94.47, 61.8% retracement of the down move from 95.77 to 92.37 seen as the next upside target as the pair continues to trend higher following a break above 94.00 with the current move seen as corrective. As said, 94.47 on the upside, and on the downside the ideal reversal should occur somewhere around the 93.80 zone, while the risk would be seen on the loss of 93.30 zone double bottom that will bring bears back in play. And crude oil is still in the under pressure as the recent recovery of the fresh low at 88.94 did not show much of the action. Failure to regain the next high at 93.17 occurred at 92.69. As we can see, the price remains pressured and holds under the descending trend line connecting 93.82 and the 93.17 tops with a brief break higher, not providing any valid results so far. Currently the price is moving within the 20 and 55 days moving averages, holding below the trend line with some improvement seen on the 4-hour studies, still lacking strength to clear required levels at 93.17 and the 93.69 in order to, 93.82 in order to pick up the recovery and confirm the near-term base at 88.94 and allow for a stronger retracement of the latest 100.72 to 88.94 descent. Any failure under 94, I would say, because this is marking also the previous higher base and the previous strong support, will be seen as corrective and not promising much of the recovery. In case we see a break above 94, then further recovery is quite likely. Otherwise, more pressure seen towards the downside with the wider picture, larger picture action seen entrenched between 90 and the 55 days moving averages. The bigger one is at 89.80 and the 55 days at 93.46. This is the hour break point zone between 93 93.82 and 94.00. In case of any failure under 94, we might expect some further weakness. Also, the current situation in the Eurozone with the increased fears about Spain and the OPEC commenting that had the lowest output since January, showing that oil prices are likely going to go lower as increased fears of the further deepening of the crisis are likely to trigger lower demand for the crude oil, and of course this is the one of the main reasons for price to further fall lower, despite the OPEC comments that ideal price for them would be around $100 to $120 per barrel. And finally, gold, again, not much of the action seen despite recent rally higher that failed to regain a previous high at 1787, 1783 seen so far, and further easing followed, still showing the yellow metal entrenched within the range. The lower part is at 1736 and the upper one at 1786. Rather directionless trading with no signals at this point, as hourly and 4 hours chart studies are still quite neutral. Break, I do apologize, a break through either side is to define the near-term direction. However, quite extended the conditions on the daily, as the indicators are already coming out of the overbought territory, see more signals towards the downside. But again, to repeat, if we don't see the break below 1736, then the price might stay further in this range. This is from 14th of September when the range started, so we're talking about nearly 3 weeks of sideways movements, indecision about further future of the yellow metal prices, and we have to watch on the upside 1787 and on the downside 1736. Absolutely a break above, as the trend from 1590, pardon, 15th of August low still stays intact, and the current movement seen as consolidation. More focus would be seen towards the upside according to the current situation, but again, quite toppish studies on the daily chart see no much potential at this point. Of course, a break above 1787 to open our key resistance area at 1790 and 1802, a break of which is to possibly refocus the record highs at 1920 posted last year in October. From Ichimoku studies, daily ones are very bullish and very supportive, and see no any signals so far for any reversal, while the 4 hours are currently, I would say, rather neutral to positive, as the price is still within the cloud and moving between the two moving averages, showing no direction. So basically, break of either side at this point is to give the fresh direction for the yellow metals price. That was all for today, Monday, 1st of October 2012. Do we have any questions for today, please? No questions? Okay, no problem. Okay, thanks then for being with us. Keep an eye on today's releases, as a number of important things are already released and due to be released. So these are going to be quite important things and might drive markets further. Just to mention, the Spanish manufacturing PMI came in better than previous at 44.6, while disappointing Switzerland one came at 43.6, much lower than forecasted 47.6, and the previous month 46.2. 0.7. Now we are focusing the Eurozone and the UK that are due shortly. I wish you a nice day today and very successful and profitable trading, and expect you again tomorrow morning at our regular time for our sessions at 7:00 GMT and 10 o'clock local Cyprus time. Have a nice day.